Welcome to another weekly Friday chat, November 17th, 2023. Next week is Thanksgiving. It's insane. And also, I apologize, we're going to be talking about inflation again and the Fed. I know the last time I said I was sick of it and done talking about it, but I think that was just me venting because I'll probably always be talking about inflation and the Federal Reserve. I know. I'm still talking about the Fed and interest rates, but a mid-October report came out which is leading everyone to believe that cooling inflation numbers has finally signaled an end to the Fed raises. Let's jump into it. So, as we mentioned, cooling inflation is likely going to end the Fed rate hikes. Mid-October price report unleashes stock and bond rallies on Tuesday and Wednesday. As of this recording on Thursday, the market's down a little bit, but we're hoping that this is going to be an extended period of positive stock and bond performance because inflation's broad slowdown extended through October, likely ending the Federal Reserve's historic interest rate increase. Consumer prices overall were flat last month at 3.2% from an historic 9.1%. With the October report, core prices have increased for 5 straight months, more slowly than in the previous 2 years. That string of lower readings is moving closer to what Fed officials have long said would be necessary to convince them they no longer need to raise rates. The Fed raised interest rates this year to a 22-year high. So what does this mean? I know you're sick of hearing me talk about this, so I'm not going to spend too much time on it today because I've spoken about it probably 20 times already. But the markets, in my opinion, the past year and a half have been driven by interest rate uncertainty, the Fed raising rates, and inflation. And also that the economy was too hot to cool inflation. Well, a lot of that from this month's report and from the past 5 months has seemed to abated, which is why you saw on Tuesday and Wednesday the market really have a nice little rebound and rally. As of this recording, about 12:16 on Thursday, the markets are down. What we're hoping is that now the market can have its footing and have a clear understanding of what the Fed is going to do. The market hates uncertainty. It's not so much the market hates bad news. The market hates news that it didn't expect. Who knows? Hopefully, we're going to see a nice, what they call Santa Claus rally. However, next week is Thanksgiving. I hope everyone has a great Thanksgiving. As I mentioned before, we're going to be off next week for the Friday Weekly Chat for the Thanksgiving weekend. But in a Wall Street Journal report, which we're looking at right now, is Thanksgiving is going to cost us less this year because inflation on a lot of the popular items are down. Pumpkin pie is not as inflated as it was last year, up over 20%. A lot of the Thanksgiving feasts and food that we were had about a 20% inflation cost and prices. Well, they're down. Also, good news, sweet potatoes are back down to their levels they were in 2020. Cranberries, you can get a great deal on them. So, hey, housing prices are going through the roof. Interest rates are still 7%, 12% car loans, but your cranberries for Thanksgiving are going to be at a discount. Well, there you have it. That's another weekly Friday chat. We're going to be off next Friday for the Thanksgiving weekend, so enjoy it. Remember, save the turkeys and eat pizza. Have a great Friday. See ya.